Now, in the last video, we talked about how you can exchange in the Forex market, how you can engage in that type of market and possibly be profiting from it. Now, we do not encourage that you go buying foreign currencies in a currency exchange booth, but instead, we would like for you to go through a broker, more specifically, a online one. Now, for those of you who have gone online and made some unrealistic profits on your demo account, you probably have been looking at your screen and be like, "She, my screen looks really sexy." When the most profitable traders actually know that they're dealing with an old hag who's too stubborn to give them a percentage in their profits. Let me introduce you to her.
Dripping like gold, you got me so wild. Dripping like gold, I'm a queen, I'm a queen, I'm a queen.
Okay, so welcome to the Forex market case study 1, the Forex market 3. We're gonna be talking about how we do this in a more detailed manner. So if you are new here and you probably are lost, you go back to the introductory playlist and start from there. Follow up from the case study 1 and you'll end up with the continuation of 3 videos in the Forex market. So this is Forex 3, and apparently this is going to be the last segment on the case study 1. So we'll be concluding what the Forex market is in this case study. The next case study is going to be about brokers. So if you're new here, you go back to the playlist in this channel and you click on the introductory playlist and you start from there. But if you a follower from before, one of the subscribers, you can just watch here, new or old, just stick around, you might like what you see. Anyway, so I'm going to be explaining this in a detailed manner, so let's get right to it. Anyway, online trading. Well, online trading is like whether you go into a foreign exchange booth for you to change your currency, you go to this online. That's how you that's how you engage in the forex market. So with the online trading, there's benefits to it, but here are the benefits of doing that. Number one, it's fast. Well, ever since the internet bubble up until now, technology has been evolving, and you have a great amount of luxury in your hands. I mean, like before, you had to wait for something to be downloaded in like 2 days or something. Now, you can just download stuff like as quick as 1 minute. So that's the reason why online trading platforms like these are fast. And number two reason, you pay less commissions. Well, it's a good time to be alive at this generation, because you have a lot of brokerage firms out there that allow you to pay less commissions, and they also like to bring in more clients, which kind of like stimulates competition between the two, or between all the brokers. So there's a reason why you have less commissions. I mean, you get to pay less rather than you go into a currency booth and doing all that type of stuff. Now, number three reason is kind of touching into case study 2. It is to do with the contract of difference. Now, this specific topic is probably going to be discussed in more detail in the case study 2, because we're going to be looking into brokers. But overall, this contract of difference, it gives you the ability to trade without owning the underlying asset. So in actual fact, that means that you don't need to uh, trade in a way where you go and start buying foreign currency and keeping all that foreign currency with you. You just have to uh, initiate a contract with your broker, or the broker initiates it with you, and then you execute it after the market has done that for you. So really, the contract of difference, it kind of gives you a flexibility to trade online without owning the actual underlying asset like the stock or the share. you know like back then, if you want to go to buy a share from a company, you would usually pay a certain amount in order for you to carry those share certificates with you back home. I mean, it's kind of like a lot of work. So I mean, this contract of difference eliminates that all that task for you that you can do. I mean, the brokerage firms uh, get that out of the way, which makes it quite easier and makes it, more efficient for traders to uh, come in and go out of the market. Now, the fourth point about this online trading is that they give leverage. So rather than you making only 15 toya in how we discussed in the Forex 2 video in that example, you would be, making more than what you put in. So it kind of is like brokerage firms giving you buying power to make more out of your investment. So these are some of the benefits, and with the availability of these benefits, the availability of these benefits gives you the um, flexibility for you to execute your orders within the market. So number one, it's fast. Well, it is fast because you have the online reliability. Like, think about this technology. Who wouldn't want to miss out on the developments that technology has made available to us? That's the whole reason why the internet is there. It's there and it's fast, and the reliability is like really good, since it's a very great time to be alive in this generation. And also uh no delay in the transaction. This is a part of the reason why you have the online reliability. Now, since you have the reliability of executing trades online, you also have platforms that are striving to be better. They constantly improve their websites and their interface. The brokerage firms uh, create more material and more efficient ways for traders to execute their trades. So, in other words, you have the evolvement of the evolution. Sorry, the evolution. You have the evolution of platforms that make themselves better in order for traders to be efficient in their trading career. And also the global accessibility is also the reason why you have the online reliability there. I mean, since you have the online reliability, you have access to everything like almost everywhere on the globe. So a better representation would be like this. You have money floating around in the globe. You have all kinds of orders being executed. You have liquidity being pulled around. And so it's a $6.6 trillion dollar, sorry. It's a $6.6 trillion market that's out there, and it's just They're ready for anyone with the right type of skill to grab, or right type of patience, right type of humbleness, right type of discipline. Yeah, so less commissions. Well, you have brokerage firms that are out there trying to be more competitive with each other. That's why you have less commissions. That also gives you the accessibility for you to trade. You know, some traders don't have that much to trade, so they rely on that commission to be profitable in the long run. And also you have the third point, which is profitability, which I've already explained. And so with the contract of difference, uh, well, I have 3 points here that I can explain, but mostly this stuff is gonna be covered in the case study too. So the first thing is that you have to understand that these contracts give you the ability to not own the underlying assets. I mean, think about it. I've already mentioned this, and you don't need to go and carry all that asset. You don't need to go and buy a share certificate. All that work is done for you online with the contract of difference. Now the third point also explains that you have to gives you the flexibility to buy the stuff in the forms of units. So that means that um, rather than you trading the price itself with the amount, you trade the price itself in the form of units, the asset itself in the form of units. So if you were to split up your investments, you trade them in units rather than the actual amount. So this is what the contract of difference gives you. It gives you that flexibility. And also the last point is also gives you the ability to short that asset. That means that rather than you buying the asset in order for the price to go up, you can also sell the asset, which you can profit of the price going down as well. So if we were to revert back to our Forex 2 example, rather than you trading the price that you can see, you would be trading a contract, and that contract will give you the ability to buy and sell the currency pair itself. All right, now moving on. Leverage gives you the ability to maximize the amount of profit that you make. It is actually providing you buying power on the asset. So if you were to trade a particular asset with leverage, you would maximize your profit if the price or the market goes in your favor. And like I said in the second bullet point, it maximizes possible profitability, meaning that rather than you making investment of 1000 kina, you can make more if you were to use leverage rather than the actual amount that you've invested in without leverage. Now, the flexibility in trading style is also what leverage can offer you. You can choose an amount of leverage that you want depending on whatever strategy that you use or whatever approach that you take. And so, leverage really the option of leverage over a trade that you execute by a broker is actually paving way for flexibility in your trading style on whichever way you choose. Now, an online trading interface. Well, I'm just going to show you three components of that platform on that interface. You have first things first, a price chart. Now, this stuff has uh, graph shown over there, you can see there's a vertical axis and a horizontal axis like all graphs. Now bear in mind, the horizontal axis displays the time and date, whilst the vertical axis displays price levels. So bear in mind, you can adjust the time frame but not the price level, since the fluctuations of the graph itself is relative to the price at that point in time. That's it. Bear in mind also, the the graph itself can also be adjusted according to time frame only, so you can only change the speed at which you see the graph moving or fluctuating. So you can change that horizontal axis to 1 tick or 1 second, all the way up to days, weeks, years. So you're just adjusting the time frame, but you cannot just adjust the price. So bear in mind. Now, with the second component I'm going to introduce to you is the watch list. Now, this stuff is like a tab that exists, like usually on the side on your trading platform, and it displays the bidding price and the asking price, as well as the spread of the assets. So there are different types of assets that you can choose. As you can see, you have Forex assets there that displayed, the Forex pairs, Euro USD, GBP USD. Those are Forex pairs, whilst you have primary assets, which is there displayed above on top, which are probably stocks. And you also have micro futures. Those are futures that will be traded on the markets. So bear in mind, if you were to utilize the watch list, it's going to display everything that you want to trade, especially the ones that we were talking about, the Forex pairs. So bear in mind, if you click one of those pairs, it's going to display itself, its price fluctuations on the price chart itself. So just bear in mind that it's also like a shortcut tab that you can click on, and it will show you the graphs itself. Now, the third component that I want to show to you is the place where you place an order. Now, this stuff is usually a tab that you can set your parameters in, but I'm just putting a buy and sell button, which is for simplicity's sake. You can just click on one of those and the market's gonna execute the order for you in your brokerage firm or your platform or your interface. Now, usually, if you have a brokerage platform that has a buy and sell button that you can click on, usually a tab is gonna appear, or separate window is gonna appear for you to set your parameters on how you want to execute your order. So bear in mind, the buy and sell function is just like how we've described in the contract of difference examples, but you have to be aware of what these components are first before we move on. So just know that there is a buy and sell function in all those brokerage platforms. Now, just to get a glimpse of what they do online, if you see that green line there, it's because we've clicked on the buy button. Now, when you click on the buy button and the price goes up, you would have made money, you would have made a profit if the price went up. And if you click the sell and the price went down, you would have also made money. Just to clarify that out of the way, this function of that button is for you to trade the markets in that manner. Now, I may be talking to you about all these market terms and functions and descriptions, which may sound all good to you if you follow my words to the letter, but you'll have to be aware of the disadvantage, especially if you are engaging in this type of market. Now, there are 3 points. The first and foremost, this stuff is very risky. So if you were to put this stuff on, like if you were to trade the market, like buy the stuff utilizing a leverage, and the market didn't go in your favor, rather than you losing an amount that you desired, you can actually lose more than what you thought of. So bear in mind, this stuff is very risky. You have to be able to approach the market in a way where you can eliminate those risks. You have to be on point and on sharp mind about these markets, and having to realize that you can not only maximize your profit but also maximize the amount of loss that you make. There is some sort of headache for you, which you have to understand, and also the risk involved is very traumatizing if you were to do this on a larger scale. So understand this stuff is very risky, especially if you don't know what you're doing. I mean, you have to be articulate in this market, so make sure you understand this disadvantage. A part of the reason why the markets that you are trading right now are stressful is because, like I said in the first bullet point, it's risky. And the second bullet point is just another headache on top. It's because these markets that are risky, they are very stressful as well. I mean, think about it. You have to be sharp every time when you trade the market. Every time. No messing around, no trading out of emotion, no, you know how our brothers say, oh, psych up trading. No, you don't have to do that. You have to be articulate and sharp, on point at all times when you're trading these markets. And so this stuff is like a skill that you learn, is a thing that you have to be on point every time, and thus it requires a lot of mental exercise, and because of that it is not for the faint hearted. I mean, if you're really easily affected by a trade that's not going in your favor, you probably are not in the right career. So you have to be very you know you have to be very, very stable in your mental mindset. And so, since I've described all this character, it makes you think of a character that you might be familiar with. Yeah, the super trader. Well, don't lose hope. This channel is designed to make you a super trader. I mean, if you're subscribed here, well, welcome to the Justice League of traders. You might as well be wearing a red cape and sitting down in front of your monitor and trading every day. But anyway, if you wanna know who trained the super trader, well, it's this gal here, this stubborn lady. She's the one responsible for making super trader who he is. She teaches discipline, wisdom, and all of that will be discussed in case study 3, which is about the trading concepts. So make sure you stick around. This gal is the reason why this video has to be made. I have to introduce her to you first, just so you know where to go with this channel, or where this channel is going. So bear in mind. Now the final notes. I put this stuff for you to take notes. So this stuff is something that you don't master overnight. It takes practice. You have to get to know the platform that you're using first. So understand that. Understand the trading platform. Understand the functions of those platforms. Will understand the buttons and everything. In that platform. It's quite the sophisticated terminologies that they use. You get to research on all of those stuff too. So just make sure you do your due diligence with those platforms and understand the advantage and disadvantages. Yes, you have to really consider what is it, what is this career in for? I mean, what is the catch? You have to understand what are the advantage and disadvantage are. You have to be like, what is the catch? I mean, if I'm risking $1,000 or $100,000 or 200,000, you have to be aware of both sides of the coin. And the last point, don't rush, man. This thing takes time. So even though if I may have not missed out on some explanations, you can go do your due diligence on those topics. Just type on the word on Google and it'll explain it to you. Make sure you read the definition and it's on Investopedia or something like that. So those are some of the final notes that I've put out. Make sure you take note of this stuff. And anyway, thank you for being with me through the case study 1. We have concluded the Forex market. This is the Forex 3 video and it's the last video on the case study 1. So make sure to subscribe, hit the bell, and share this video out. It will give a glimpse of what we do here and how we trade. And make sure to click the notification bell. It will update you on the new coming videos that I'm gonna be putting up. And thank you.